Hello and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth. I am delighted to be joined by a new guest on the podcast this week, my lovely colleague Kamal Warraich, who is actually based up in our Llandudno office. Have I got that right?
Absolutely.
Who is the head of our fund selection team. So welcome.
Hello, Jane. Thanks for having me.
And as it's your first time here on the podcast, it's very, very important question. The most important question we ask is, what is your coffee or hot beverage of choice?
Thank you, Jane. I'm partial to a cup of tea in the morning, actually. And then in the afternoon, I do like to switch to coffee and go for a latte or a cappuccino.
Oh, to keep you going through the afternoon.
Absolutely right.
Well, welcome aboard. And as our regular listeners will know, the podcast is based on our weekly market review, which you actually wrote this week. And it's really here to help cut through all the noise, but also to demystify what's going on in the markets or the macro environment in a simple and easy to understand way. And hopefully people will feel more informed, more confident, and therefore more in control of their financial future. So if you like what you're hearing, don't forget to hit follow on Spotify or Apple or your podcast channel of choice, and you will never miss an episode. So welcome to this week's coffee break. Let's get into this. Grab your coffee and listen in. Okay, let's start by talking about inflation then in the US and Europe. So from what I read, it looks like the headline inflation numbers were largely the same as the previous month, but that potentially we have a disinflationary cycle in the West. So in short, inflation isn't rising, but it isn't falling quickly either. So could you tell us in a little bit more detail what's happening with the numbers and then potentially about what this might mean for investment portfolios?
Sure. Well, let's start with the headline numbers for the US.
Yep.
So they were actually identical to the month prior, as you've pointed out. But when you strip out volatile food and energy prices, these were marginally below expectations. So although the core numbers came in at the same price, so 2.6 and 2.6, the market had expected these to go back up again for December.
Okay. So what was it that caused inflation to sort of stay the same then?
Well, there were two opposing forces. One is that housing prices and related prices, so we'll get into that in a moment, but housing had gone up slightly within the index and other prices had come down.
Okay.
So, for example, transportation and clothing.
So sort of netted each other out, as it were?
Netted each other out against the assumption that actually all would move up in the same direction.
And so housing related costs, what's that, rent, mortgage payments, that sort of thing?
Yeah, so in America they call it the housing owner's equivalent rent cost. So part of it is based on what you would get if you were renting your house out. And there's an assumption in there, but that index is quite a good estimate of inflation in housing.
Okay. So the US, pretty identical and marginally below expectations. So what's happening in the Eurozone and inflation figures there?
We actually saw a bit of easing in the Eurozone and below expectations. So the headline level eased to 2% from 2.1 in November. That was the lowest figure since August. So that was quite interesting. Okay. And then core inflation also fell to 2.3% versus 2.4%. And that was on the back of 2.4% in December. So you've had a reduction and against expectations. So there was also a moderation in the growth of service prices, which has given investors confidence that central banks have finally gained control of the narrative.
What's going on with potentially portfolios, but particularly perhaps if we talk about equities and any corporate earnings that have come out in the last week or so?
Yeah, it was quite an interesting point in markets. There was a midweek sell-off, which was masked by a subsequent sharp recovery, actually. So there were some interesting data points that came out. We saw a raft of large bank earnings at the beginning of the week, which the market interpreted as quite mixed. So JP Morgan, they beat on their earnings estimates, but they highlighted lower investment banking fees. And in Wells Fargo, and this was the crux, they noted pressure on net interest income, which possibly implies earnings for the banking sector have likely peaked. But later in the week, we saw Goldman Sachs come out. They beat estimations on their bottom line for their profit. They hiked the dividend. And we also saw, of course, the juggernaut in Taiwan, TSMC, Taiwan Semiconductor. They had a fantastic earnings report. They confirmed an ongoing shortage of high-performance AI chips, extremely high demand from mega-cap technology companies, and they foresaw no slowdown in the growth of this demand.
Yeah, that's a really common theme that we have been talking about quite a lot on the podcast over the last few months. This whole AI chips, the demand there and the impact that that's having on those share prices. Okay, so a bit of a banking week. In terms of, what about commodities? And there's been a lot of noise about silver in particular, I think. What's going on with commodity prices then?
Well, it's been very, very interesting. On the back of the rally in gold, we've now seen silver play catch up. And historically, silver has always been considered a more of a geared play on gold for various different reasons.
A geared play on gold.
So a much more of a aggressive version of gold, if you like, much more cyclical. But whatever gold does, silver tends to do in a pronounced fashion. So a multiple of the gold price in terms of the price change. But most recently, silver has extended its rally way beyond gold. So we've seen silver last year up well north of 150%. Gold price was up about 60%. So what's going on? It's surging on the back of a perfect storm, really.
Okay.
So we've seen record levels of demand from governments globally, from industry, and from investors. All
for silver?
Reasons. For silver.
Okay, so what are they doing with silver? Why are they demanding it?
So governments have recently stated that silver has become a critical metal and a sort of means to their ends, which is to develop critical infrastructure in artificial intelligence. So silver is utilized in AI component chips.
Okay, so we're back to the AI messaging.
Back to AI.
Yeah,
It's also, silver conducts electricity really well.
Does it?
It's one of the best metals for conducting electricity out there. We don't have a alternative. So industry also likes to use silver for a variety of reasons. Outside of AI, one of the largest demands are coming from electric vehicles. So they're used in batteries for electric cars. And investors have gotten wind of this. And of course, they've jumped on the back of this, and silver prices have gone to all-time highs, all-time historic highs. There is something else which is interesting, and lots of commentators have pointed this out, that we may have also hit peak silver.
Peak silver, okay.
So that implies that it is very difficult to extract the same quantum of silver as we used to per ground unit that we dig up. So it's very difficult to get that quantum of precious metal.
Because the mines are more depleted these days?
The mines are much more depleted, and we don't tend to start up new mining operations just for silver.
Okay.
It's a byproduct of copper, notably, but also zinc. And so mining companies need to ensure that there's going to be demand for copper and zinc if they're going to mine for silver.
Right, okay. So it just comes off the back of that?
Usually, yes.
Yeah.
So we had a small pullback in the price towards the end of the week, which was fascinating. President Trump actually announced the decision not to impose tariffs on certain critical metals, and he put silver in that group.
Right.
Alongside gold and platinum. So there was a pullback in price, which shows how sensitive it is to geopolitics at the moment.
Yeah, interesting. And talking about Trump, I suppose this week's podcast would be remiss of us not to touch on Trump and tariffs, that other ongoing media theme. So there's been a lot of noise about Trump going to a trade war with the EU as part of the battle for Greenland. I mean, it was in the headlines again this morning. So what's happening there, rather than particularly talking about what Trump's doing, but the impact on the markets and investments, if we can?
Yeah, absolutely. I think it's more around what Trump might do to try and convince other countries to allow him to gain control of Greenland, which will impact portfolios. For instance, more tariffs. We know the effects of those potentially. So Trump has announced that he would use tariffs again as a weapon to try and convince his allies to give him control here. And we've seen that it's a 10% blanket tariff on any and all goods, to quote the White House, on a variety of European countries, us included, alongside our allies, France and Germany, commencing 1st of February.
Okay.
That would then be increased to 25% on the 1st of June. And the European nations have already announced a retaliatory package on US goods.
Yeah.
So that there's a potential for a trade war to begin again in earnest. And that's not going to do anyone any good if you're investing in equities, because ultimately it means lower profitability for companies.
Yeah. I mean, it's a theme we've been talking about for a while, about potential volatility in the markets this week, driven by that macroeconomic backdrop and what Trump is doing. Yeah, tariffs is not in anyone's interests, as you say. I think it's a bit of a triple espresso week this week. Lots of drama going on. So we talked about inflation. So while inflation is cooling my coffee down, other things in my coffee cup are definitely heating up. It seems to be that there's a theme around supply and demand dictating prices as ever. So mining companies needing to dig more silver out of the ground to get to the same quantity, hence tighter supply, but more demand for silver, pushing the price up. Also a shortage of high-performance AI chips, again due to extremely high demand from the mega cap tech companies. And then we've got Trump in the background deciding not to impose tariffs on critical metals, but imposing tariffs on all sorts of other things, which is causing this volatility in the markets and further uncertainty as a bit of a tit-for-tat trade war going on. So when politics enters the mix, volatility follows yet again. So thank you very much. Thank you for joining us on the podcast today. We've enjoyed having you.
Thank you for having me.
And if you're listening, please don't forget to follow us. Never miss an episode. If there's anything you'd like to share with us, share your thoughts, give us feedback, or let us know any themes you'd like us to cover on the Coffee Break podcast, please do email coffeebreak@canaccord.com. And thank you very much.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.